Eddie, what does a borrower need to start a process for the conventional loan?
For most loans, we're going to need 2 most recent years W-2s, 2 most recent paycheck stubs. If you have access to your year-end pay stubs, that can be helpful because that can itemize your income for us, where we can average out any variable income you might receive, like bonuses, commission, overtime. A lot of times that's a faster way of obtaining that information as opposed to having to get a verification of employment. Then we would need your 2 most recent account statements for whatever account we're going to be using for your cash to close. If you're self-employed, income would be documented through your 2 most recent years' tax returns and your 1099s.
Does the borrower need a 20% down payment for a conventional loan?
That's a very common misconception that may have derived from the fact that most conventional loans, if you're putting down less than 20%, mortgage insurance is typically going to be required. I think somewhere along that game of telephone that people play, the message got a bit mixed and people took that to assume that you would have to put 20% down on a conventional loan. With conventional loans, if you have not been titled on a home in the last 3 or more years, you can actually qualify to put down as little as 3%.
Wow.
And if you have, then you can put as little as 5% down on a conventional loan.
But if they don't put 20% down, do they still need private mortgage insurance?
Good question. There are products out that don't have mortgage insurance, but typically if you're putting less than 20% down, you're going to have mortgage insurance. The difference between conventional and FHA is mortgage insurance on a conventional loan, the better your credit, and sometimes the more you're putting down, the less you're going to be charged for your mortgage insurance. Also, with a conventional loan, once you've established 20% down, that mortgage insurance will be removed.
Got it. And does the conventional loan offers competitive rates?
Yes, we offer competitive rates on every product. You're typically going to see pricing improve significantly on a conventional and start to look a bit more attractive than your other options once your scores have gotten above 680 to 690. Typically, if you're at or below a 680 or 690, government loan options may look a bit more appealing as far as from a pricing standpoint. Every situation is going to vary based on what your goals are, what sort of down payment we're looking at, and your credit. So I'll typically show comparisons to see what's going to be best for each borrower.
Got it. And how important is for the borrower to let you know regarding any dispute accounts?
This is a good one. Credit disputes, something that a lot of people use to strategize and build their credit. We obviously don't want to have any negative or derogatory information on credit. When it comes to disputing accounts, make sure that before you start the approval process, that there are no active disputes, specifically non-medical. Medical disputes, that's not going to count against you. We don't really care about that. But any non-medical disputes, we want to make sure have been resolved or removed, because while an account is in dispute, that information is not being calculated in your credit score. And that's why an underwriter, if they were to see that on a credit report, they're going to kick the file back, ask you to remove the disputes and resubmit the file. So make sure all your disputes have been removed before applying, because also you want to keep in mind that every time you pull your credit, you run the risk of dropping your scores anywhere from 2 to 10 points. So again, no active disputes when you're applying or in the loan process.
I know life happens, things happen. Some borrowers might have to file bankruptcy during their lifetime, right?
Mm-hmm.
So how long do they have to wait to apply for a loan?
With a conventional loan, the general waiting period after a bankruptcy has been dismissed or discharged is 4 years. There are extenuating circumstances in which we can work and get you approved within 2 years after the dismissal. And some of those acceptable extenuating circumstances would be like a loss of job, a divorce, medical issues. If we can document any of that stuff, then it is possible that we can get something working in as quickly as 2 years after the bankruptcy has been discharged. You can actually qualify for FHA annual underwrite while you're in a Chapter 13 bankruptcy after a year of making payments. There are options out there. So if you have gone through a bankruptcy, don't let that deter you from looking into your options. Always know your options so you can strategize and work with what you've got.
Well, great information. Thank you, Eddie.
Thank you.